So February, the month of love, the month of Black History celebration. I believe in most of our areas it was kind of cold and rainy for Valentine's weekend. So we're just going to relive it with the title of our presentation. It's Matchmaking with Mortgages. Hi, Anthony. Hi there, Latoya. Welcome you all. So we're going to talk about various mortgage types and what might fit best for you or your situation. Of course, everybody is different. Your needs are different. Your experience, households, all of those things matter when it comes to getting connected to the right type of financing. So we're going to go ahead here with our first slide, if I can make that work. Okay. Why mortgage matchmaking? Again, we're a little bit behind Valentine's Day, but our ultimate goal is to help find a property that you love, find a home that you feel comfortable in, at least for 5 to 7, maybe 10 years, because you can always upgrade your property. But getting into home ownership is important. It's especially important through these times when we don't have a lot of control over some of the things. So with home ownership being the main focus for many of us, that's important, having secure home ownership. All right, so fixed rate mortgages. So just by the title of that, fixed rate mortgages means that your mortgage is going to stay the same. It's not going to adjust. You can get this in various terms, like a 15-year, 30-year. You can do various terms with your home loan, but most people go with a fixed rate mortgage just so they have some stability. They know that their principal and interest will not change. Now, what are some of the things that can always change in your mortgage? Who wants to share?
Insurance,
Insurance? Yes, ma'am.
taxes.
Taxes? Yes, ma'am. Now, those of us who live in Texas, a lot of us have homeowners association fees, and those things can also adjust. But for the majority of the payment, that's your principal and interest, and that is going to be a fixed amount. It will not change. All right, an adjustable rate mortgage. Again, these are kind of easy giveaways, but I just want to kind of do a reminder and a refresher for many of us. So what is an adjustable rate mortgage? Anybody aware of what that is, or has anyone ever experienced an adjustable rate mortgage?
I think long time ago, maybe it could start one way and go to a different amount. Start
Yeah.
one.
So for most of us in the states that we live in, we don't come across a lot of adjustable rate mortgages, especially for your primary loan or your primary first lien. There are times where you may have a HELOC. That's an adjustable rate mortgage. But for most of us and the clients that we serve, they're going to choose a fixed rate mortgage. You'll find adjustable rate mortgages with really high loan amounts, maybe
Hmm.
in states like California, and people get into them because it's initially more affordable for them on a monthly basis. But it
Hmm.
does have the projection of change in the future. And most of them get into it thinking they'll refinance their property, within a couple of years, right? But we can't always be guaranteed that refinancing is going to be available to us for various reasons. One being the value of the market, and then two being our own credit worthiness and income worthiness. So be very careful when working with families and they're leaning toward an adjustable rate mortgage. Make sure they have all of their facts before making that decision. All right, FHA financing. I'm sure many of you have heard of FHA financing. It is a government-backed loan. Um,
Hmm.
I had a client earlier today and she ran across a home that was for sale and she said it's a HUD house. So it was basically a home that someone else had secured a FHA loan for and they defaulted on the loan. So HUD actually backs your FHA loan. A lot of first time buyers are going to qualify for an FHA loan before a conventional loan. Anyone know why?
First time home buyer.
First
First
time
time
home.
buyers. Okay. Any other reason why? So an FHA loan was really created to give people with some credit challenges an opportunity for home ownership. So it's a little bit more lenient when you have a lower credit score, or maybe you've had some hiccups on your credit. Another situation that I'm running into here currently, I have a gentleman looking for a particular property. It happens to be a condominium. So it's hard to find condominiums that qualify for FHA loans. And
Mm.
his realtor reached out and said, can he qualify for a conventional loan? But this particular individual had had a recent bankruptcy. So it left him in the category of an FHA loan. So that's why it's really important to not compare yourself when you're going into home ownership and ask auntie and ask your friends, hey, what you got a USDA loan? Well, I want one of those zero down loans, but they don't know that your debt ratio is too high, or they don't understand that you have other people living in your home. So you have to pretty much kind of keep your business when you get ready to go into home ownership because your situation is definitely going to be unique. So for an FHA home loan, the down payment is 3.5% in most cases. There are some cases where it's just $100 down, and those
Oh.
are for some of those HUD repos in various areas. But for the most part, like 99.9% of the time, your down payment will be
Mm. Oh.
3.5% down. The
Mm-hmm.
credit score requirement for that 3.5% down is 580.
Mm.
Mm.
Now, if you're going to need any type of assistance for down payment or closing costs, your credit score is going to be driven by that program. So every layer you add to what you need is going to determine what your score and what your credit needs to look like. So the more resources you have for your own down payment, the more variety of loan program that you have to choose from. So if you say, Miss Tamika, I got my own down payment, I have access to my 401k, whatever is going on, we can get you into a home a little bit sooner if you have, a lower credit score. So some of the things to remember about an FHA loan is that you really want to keep your collection accounts low. So if you have any collections, you want to keep them under $2,000. And that does not include medical bills. Okay, so medical bills, they can be $1 million, but your other collections need to be under $2,000. If you have any disputed derogatory accounts, that needs to be under $1,000. So this is just flat out across the board. Any disputed derogatory information on your credit under $1,000. That could
Mm.
even be, I missed my car note in November, and you're disputing it, and you're back caught up. But because it was just in November, they want that dispute removed. So what a
Mm.
dispute does, and a lot of y'all know what disputes are because you can go on your Credit Karma and throw a dispute in there on something. A dispute basically puts a curtain over that item. So when you dispute something, it like hides it. So
Mm.
your credit score is not really correct.
Mm.
Okay. It's kind of like women's undergarments. And y'all know I always got something to add, but it's kind of like a pair of Spanx. Yes, it is. So it hides it. Now,
Girdle.
when you remove that dispute, it's gonna show. All right. It's gonna give you your real score. So it's important that if you're disputing things, wait till those disputes play out before we do your application so we can try to get that thing off or we can get those dispute comments off. So that's important about FHA. Now, can you get an FHA loan with a lower than 580 score? Can you?
Uh, yes.
Yes. You just need more of a what?
Down
Down
payment.
payment. Down payment.
Oh, money talks, friends. You can get an FHA loan with as low as a 500 credit score. But some of those other rules we just talked about, the 2000, the 1000, that still applies. But there are other things that can make a person's score very poor. Like I had a gentleman and his wife that had been through cancer 2 times. They had over $200,000 of medical bills on their credit.
Mm.
Did
Mm.
I say
Mm.
two? I mean 200,000. $200,000 in medical
Mm.
bills on their credit report. So
Mm.
so again, that's FHA loans, probably one of the easiest loans to get you can go to a higher debt ratio. So if you have a person with a 55% debt ratio, they can more easily qualify for an FHA loan versus a conventional loan. Anybody have any questions on FHA financing?
If you could clarify just in case
Hmm.
it's a first time buyer as
Hmm.
to how they calculate the debt ratio, just a quick
Oh,
overview. Thank
absolutely.
you.
That's a good
Absolutely.
question.
Great question. So, a couple of things I want to clarify. One is that you can be a first time buyer after you have not owned a home for 3 years. So, if you owned a home a long time ago and now you own a home again, and it's been 3 years, you went and rented somewhere, you worked somewhere, you rented somewhere, you can be a first time buyer again.
That's good to
Now,
know.
the other thing that's good to know is that most every program that's available, I'll say 90% of programs, you don't have to be a first time buyer. So first time buyer is kind of like a gimmick. We got a first time buyer program. It's an all buyer
Yeah.
it's a gimmick. All right. So it's just one of those quick sales things. So be real careful about that. Most people can reuse down payment assistance. I do it all the time. All right. So let's talk about debt ratio. You have your front end ratio. Y'all forgive me in my hands. And you have your back end ratio. So your front end is going to be your house payment alone, your total house payment compared to your gross income. So your total house payment compared to your total income. That's your
Mm,
front end ratio. Ideally, you want that number to be 30%. Okay?
mm,
Doesn't mean it won't go through at 45, 46. It
mm,
could. But it's
mm,
basically saying you want to try to keep your house note at around 30% of what your total household income is. Now, there are cases again that you can push it. And if you're comfortable pushing it, that's fine. We'll push it till the computer say we can't push it no more. But I'd rather that be a person who has some side income that they can rely on so you don't make a bad decision and, be house poor. Now, the back end of your ratio is going to include your total house payment plus all of the other debt on your credit report. All right. So let's say you got a car note, you got an installment loan, you got a couple of credit cards, all of those debts. Let's say you have some student loans, that's going to be included along with your house note in your back end ratio. And that's the basics. So let's add to that back end ratio. If you go to your checkbook and you see that you have a Klarna, a Afterpay, all that adds up too. The other thing you want to be real careful of is if you help other people with their bills and it's on your bank statement. So if you have an adult child, i.e., me, and you pay their car note, now their car, you co-sign for it, it's in their name, but it's coming out of your bank account. That's your bill. Oh, they
mhm,
give me the money. That's your bill.
mm.
So those are things that you need to share so we can find workarounds before we get in the thick of it. Okay? So no judgment, but let's figure out a workaround before we can make sure we get you all to the closing table. So that's your back end. Now, if you're FHA, you can push that number all the way up to 56%. It's actually 56.9. So it's a pretty high amount they allow you to have your bills. You want to have really strong credit though if you're pushing those numbers that high. Anybody have any questions on that? That's a good one, Miss Phaedra.
That is 56%.
Yep.
I
You
just want to
understand how
say
to
that
calculate it, Mama?
Huh?
You understand how to calculate it?
I think I do. You
Okay, so
said the
the back
total,
end, you're going to calculate it by taking your total house note plus your minimum monthly bills.
right,
So if you have a vehicle note, credit cards,
right,
all that gets added together, you're going to do the divide symbol and put your gross income under that.
right.
Okay? We have computers to do it all, but I like doing stuff by hand. I'm old school.
old school.
Old school and old too. Okay, let's go on to the conventional financing.
Okay.
All right, what has anybody heard about conventional financing that they'd like to share? Realtors, y'all tell me. What have y'all heard
Okay.
about conventional financing?
Think, um,
Sometimes when you show a house and it'll say What loan or cash? What does it say?
You say conventional or cash?
Uh-huh. Why?
Because let me see, conventional is not government backed, right?
It's not government backed, yeah.
And so, and the guidelines are not as strict on the FHA.
So for
I'm
conventional,
like that.
right? So you're getting there, but the guidelines on what document
Um,
comes after the inspection? What's the next step?
the appraisal.
Appraisal. So a lot of people lean toward conventional based on the property. So if the property is not in the best shape, the listing side of the deal will want someone to bring a conventional loan because the appraisal can give you a little bit more cushion. So that's why sometimes you'll see a listing, and some of you home buyers, if you're looking online for homes, it may say cash or conventional. And that's because that listing agent is not working with a flexible seller. They're not wanting to do repairs. They want to sell the house as is. You know, some of you all probably have experienced that before. So, but a conventional loan, if you read the slide here, it says your credit score minimum is 620. So there are some really interesting changes that have happened with conventional financing, and they've actually removed the credit score requirement for Fannie Mae, which is very interesting. So if you have a really large down payment, 20%, 30%, and your credit score is not that strong, it still may go through with the conventional loan. So those are some of the recent changes.
Mm,
Before again, 95% of people were looking at a normal down payment for
mm,
a first time and most second time borrowers. They're still wanting a reasonable down payment. So the minimum down payment on a conventional loan, if you are a first time buyer, is only 3% down.
mm.
3% down. Not every lender will do it, but we will. 3% down is your down payment if you qualify. First time buyer. Remember, first time buyer is anyone who has not owned a house in
3 years.
years. Exactly. Now, the conventional loan is going to be a little bit more strict with rules such as how long you got to be out of bankruptcy, things like that. If you require mortgage insurance on the loan, you're going to have a little bit stricter requirement too. So your debt to income ratio, it cannot exceed 50% on a conventional loan. And that is including your entire payment and any mortgage insurance that you have on your loan. Now, you can avoid mortgage insurance by putting a full 20% down on the loan in most cases. And then there are some opportunities where we can add a second lien and avoid mortgage insurance. It's not always as cost effective to do it that way because mortgage insurance rates have come down significantly on conventional loans. I believe in 2026, mortgage insurance is still a write off on your taxes as well. But at some point, when you do have 20% equity position in your home, you can then remove mortgage insurance, which will save you a few dollars every month. So again, the biggest thing about conventional mortgages is for the most part, you need a stronger credit profile. 700 or better is ideal. The minimum down payment for a first time buyer is 3%. If
Mm-hmm.
you're not a first time buyer, the minimum is 5% if you are not a first time buyer. You're going to avoid that mortgage insurance at 20% down. We have a program at 15% down. So for mostly everything I'm saying, it's about 99% because there's always a little bit of cushion for a program or for this or that. So this is just general, right? We have to look at your individual situation. Now, the other thing about a conventional loan is it does not have upfront mortgage insurance. So an FHA loan has upfront mortgage insurance, and so does a USDA loan, and so does a VA loan. But a conventional loan does not have upfront mortgage insurance. It only has monthly mortgage insurance. Does anybody know what mortgage insurance does? Anybody
It's,
want to share?
it's something happens to the person that's gotten the loan or kind of helps out with that, I think.
Who does it help?
The
The
buyer.
lender.
Well, it
The
helps the lender. That's right.
Yep,
That's right.
the lender, exactly.
Hmm.
So mortgage insurance is a protection for the bank. So
Yeah.
because the bank is giving you 97% of the value of this house, they want protection in the event of your default. So mortgage insurance helps to make up the difference between what they could sell the house for and what you initially borrowed. So it's kind of like this big pot of money that's just being collected to help pay banks back for when we are unable to meet our obligation. So if you ever see a foreclosure that says Fannie Mae or Freddie Mac, that means that the person had a conventional home loan. Okay. If you see a foreclosure, it says HUD, that means the person had an FHA home loan. So those are the entities that back these loans that were taken out. All right. If I'm going too deep, please let me know, because sometimes it's got I go too far. All right. So let's go on with the VA mortgage. Do we have any service members or prior service members with us? I can't think that we do. But both areas that we have represented here have service members surrounding you. You have Jacksonville Air Force Base, and then here in San Antonio, we have three bases and some reserve units here near us. So VA home loans are underutilized. I'll leave it right there because I have helped people with their VA loan, and it's their third year. They didn't know that they had a VA eligibility available to them. So VA mortgages are underutilized. They are 100% financing. So this is one of the things you could start to market. For us, we actually don't have administrative fees for our veterans, so that saves them about $1,700 on their closing costs. And then if negotiated properly, we can help them get into the house with little closing costs. That VA appraisal is going to be similar to like an FHA appraisal. So the property does need to be in decent condition. It doesn't have to be perfect, but it does have to be safe. It has to be well maintained. It can't have things such as peeling paint or rotted wood. The biggest thing I see for like a VA appraisal is that the client needs to have a stair rail if there's certain amount of stairs. So those are all things though that can be requested and asked for at the time of the appraisal. So don't let helping veterans or VA loans, it kind of scare you. Go after serving veterans. They can be some very loyal clients. A lot of times they'll have their ducks in a row just from their habits of being organized. Some of them have had hardships too, and divorces and losses when they move. Sometimes they move and their house gets taken because they thought they were going to be able to sell it, but they weren't able to sell it. We personally been through that two times. House on the market 12 months, no buyer, right? 12 months. So there are people who have had hardships as well. And what I find value in is just asking questions surrounding what happened, because if they defaulted on a VA loan before, they can still use their VA loan again. So be careful about saying, oh, well, we're not going to be able to get that VA loan then. Let us look at it and see if we can still help them get another VA loan if they have enough eligibility available to them. Um, Anybody have a question about VA loans? Again, it is 100% financing, so no down payment is required, even though they can put money down if they choose to. But
Mika,
yes, ma'am.
can you please tell me again what it is that you guys do not charge? That saves the,
Administrative fees, so
thank
underwriting
you,
fee or processing fee. So we waive those for veterans.
thank you, thank
Mhm.
you.
Yes, ma'am. Anyone else have a question about VA loan or a friend or family member? And I would, yes, ma'am.
Miss Tanya, hello.
Yes, sir. You have a question?
I'm at work. I'm just trying to let y'all know I'm at work, so I'm listening to you. I ain't able to talk as much.
Well, hey, we appreciate you joining us, Mr. Crompton. Thank you so much.
Yes, ma'am.
Yes, sir. All right, so I'm going to go back because I see something here on the chart. I try not to just read these slides because they're boring, but I wanted to share with you all for all of these loan types outside of USDA. So FHA, conventional VA, your client can purchase up to a fourplex. So your client can purchase up to 4 units if they desire to have home ownership and become a investor, all in one. And they can still have reasonable down payments, and they can offset their actual mortgage with projected rental income that will come in. So if you have some family members or friends that are looking to become investors, we're actually seeing this a lot in some of our older clients. Ms. Sharissa has a client that's a little bit more seasoned in life, and one of her goals is to have some investment properties for her family and for, leaving a legacy. So she's looking into more of a duplex. And I think that'll also give her comfort just in her season of life, just having someone else near her as well. So y'all keep that option open to look at what people's long-term goals are, not just their goal for this 30 to 60 days, but hey, what does your 5-year real estate plan look like? Let's make sure we're developing a holistic plan so that we become a part of the client's process for their lifetime. If you're a realtor and you're working with me, we want to partner with them forever. And if you're a home buyer, we want to partner with you forever to make sure we help you not only become a successful homeowner today, but continue to build your wealth down the line. Implement things to get you there. All right, so we are going to go to the next one here. We are almost done, y'all. So USDA financing, a lot of times people will shorten that and call it a RD loan or a rural development loan.
Rural development.
Man, they just keep pushing it out and out and out. So you're gonna need a car that's economical on gas to get home. It's totally fine. But if you work from home, if you don't have children in 16 sports, a USDA area or RD area can be really nice. So most of the time they're going to be, 3, 5 miles outside of the area, maybe off the highway a little bit. So those areas continue to change though, because they're all based on the population. So as the population increases, even where I live right now today, when we bought this property 12, how many, 14 years, I don't know, a long time ago, it used to be a USDA area. It's no longer USDA. So it's been pushed on out, way out yonder even further. So once you get into that area, it may not always stay USDA, but you'll have your loan already. So like no one can take your loan away from you. But for the most part, a USDA loan requires no down
No
payment.
down payment.
You do have a little bit of an upfront mortgage insurance that's rolled into the loan. And then you have a small monthly mortgage insurance for USDA loan too. And it's all because of the backing of the loan. So it can be payment for you compared to other loan products, but it also takes into account your entire household. So if I live with my mother and my father and then my husband, so if it's me, my husband, my mom, and my dad, all four of our incomes count in the eligibility of whether we fit for USDA income restrictions. Even though me and my husband may be the only one on the loan, if they know my mom and dad are living with me, they want their checks too. Okay? So you have to be careful of that. And I'm gonna tell you some of the dead giveaways. Some of the dead giveaways are people's tax returns. So they get your tax return because they want to see what's your real income. So dead giveaways can be people's tax return because sometimes, let's say I'm caring for my mom and dad, I might file them on my taxes. Or maybe I'm taking care of my cousin's kids. I might put them on my taxes. So they want to know, are these people living with you? So those are some of the things that we look out for to make sure you're eligible for something when we tell you you're eligible for it versus just taking your word for it. We try to do all the research to make sure we set you up for success. All right. So it's telling you what type of programs or what type of homes are available. You can have a condo, townhome, and single family home. It does not say multi-family home. So the biggest thing also with the USDA loan, y'all, is you cannot own other properties at that time. So if you have grandma gave you a house, grandma put that house in your name, you didn't even know it. Like, doggy grandma, don't move it out of your name. So that happens, right? You're like, oh, I forgot she gave me that house.
What's the credit score requirement for USD?
Low is 600.
Hmm.
Yeah. So, and again, a USDA loan is going to have a stricter debt ratio requirement, and it changes once your credit score, I believe, is 680. It gives you a little bit of higher debt ratio requirement. But their system has gotten stricter and stricter over the years. It has. It's a different underwriting system that the file goes through, and it has gotten stricter over the years. Everything seems to get stricter though, just based on inventory. All right, so here are some of the other programs that we have. We have non-qualifying mortgage programs. These don't fit within your normal criteria, but if you are a self-employed individual, and let's say you don't always have your taxes together, we have other programs that can assist you, like bank statement loans. Asset qualifier loans are for people who have a ton of money and they can qualify just based on their assets. So we do a calculator to determine what monthly income we can use based on how much money they have put away. So if you have a seasoned client with some assets in retirements or IRAs or various types of accounts, we can analyze those accounts and see what we can allow for income. With our non-QM program, we can also mix incomes. So we can take their assets and their bank statements and use both. So there are some really cool programs that we have to assist clients who are not just, black and white vanilla W-2 people. And if you have clients who are investors, our DSCR program is amazing. And that's when you qualify for buying a home solely off of what the rental income is. So this is great. This is something you could pick up, Miss Tally, with your notary work. If you're signing investors and you're looking at gaining them like as a client, that's a good program to talk to them about, the DSCR program. So make sure you all are keeping up with those investors and those clients who want to be investors, because that's how you build their repeat steady year after year. Like you can count on Mr. Smith for 2 deals. Like he told you he's buying 2 houses. Why not buy them with you? So find out what Mr. Smith's goals are every year, and you can kind of, hey, I can count on Mr. Smith for 2. For instance, if my main client is a realtor and I'm talking to Sharissa and I'm finding out Sharissa's goals are to help 20 families. I'm like, hey, Sharissa, can I count on you for me to help at least 3 families? I can't help them all, but can I help at least 3 of them with you? So set those goals with your clients as you're working with them. And the same thing, if you're on here as a projected buyer, make sure your realtor and lender understand your goals, because our goal is to make you successful, because we don't get paid if you're not successful. That's how we get a check, and we want a check. Checkmate. I'm
And I
probably
just I just want to add, and your realtor and your lender may ask a lot of questions and for a lot of information, but for the time that we're working together, we do kind of need to know everything, the good, bad, and the ugly, so that we could make sure that your health and your goals are met.
That's right. That's right. Would any of our prospective home buyers like to add anything or ask any questions or share something
Experiences.
you feel is holding you back from being able to buy a home?
Me?
Would you like to share? You feel like it's you, Miss Sanchez?
Yes, it's just me.
You think it's you. So you think it's a mindset?
Yes.
Can be. Yeah. It can be a mindset. Surrounding yourself with people that are rooting for you is so important, because life, I mean, sometimes I don't want to get out the bed. I don't. I don't want to put my feet on the floor. And so I have to start my day with something that's going to motivate me, a word of encouragement, a prayer, a devotion, like before I open a text or an email. So the way we start our day and who we choose to allow in our space, because it's your choice, right? Your choice. And then making sure, one of the things I heard today, I was listening to a lady, Terry Savelle, and one of the things she reminded me of is do the hard things first.
Hmm.
Do the hard things first. And a lot of times we want to put those off for later, because we just don't want to do it. Do the hard things while you have the energy to get it done. Tackle it first, the beginning of the day. So even if you say, Miss Sanchez, it's a mindset, it's never too late to have a made up mind to go the right direction. So you just start all over today. It's Lenten season. So it's time to let go of some stuff permanently.
Yes, ma'am.
Permanently. So stinking thinking, we letting that go permanently. It's gone, not just for 40 days, for the rest of our life. For the rest of our life. Anybody else want to share something? I thank you for being so brave and sharing that, Miss Sanchez. Anybody else? And it don't have to just be in home ownership. It can be in business life, whatever it is. Yes,
I saw
ma'am.
someone said maintenance is a
Mm,
fear for them.
okay.
Yes. And
Okay.
somebody else said, buying a home alone. That's one of my fears too. I'm
Okay.
Well,
glad they brought
I
that
am
up.
a single, well, my kids are grown now, but I was a single mother. I've been in my house 20 something years and I purchased my home alone. So you can do it.
Yes, ma'am. Thank you for the encouragement.
Hmm.
Yes, ma'am. And just write down the few things, Miss Sanchez, that would give you a little bit more comfort. So a lot of us, we want to be taken care of and we want to have um, that security, right? Security. So if having a little bit of money saved would help you, then work toward enhancing your emergency savings account. So you have a little bit of cushion money to fall back on, if you had a short month or something. But you're
I'm
right.
I'm I'm
Yes,
doing it now. I'm doing it
very
now.
good.
I don't mean to cut in on y'all. Apologize about that. I'm
No,
doing
you're
it
fine.
now.
Very good. And just stay focused. If you ever find yourself not focused, call us because we don't mind encouraging you. Like that is my spiritual gift is encouragement. So if you need something, always call and say, sometimes I help people. I just call because I'm down. So I call just so we can laugh or whatever. So use us as a support if you don't have anyone.
Yes,
Is
ma'am.
there anyone else that would like to share something they feel is holding them back? And who said maintenance? And did they home maintenance?
Is that Phaedra?
That was Miss Virginia, I think that said, oh, maintenance, but she can't.
Okay, I'm not sure if she meant home maintenance. And that can be a little bit scary too, upkeep of your home. And that's why having that savings account is so important. But one of the biggest things about home ownership is if you get into an affordable home, something that you can comfortably do, and not, again, no comparison, get into something you can comfortably do and make sure you can still save as you're paying your mortgage, that you can still put away money for that maintenance account. Just like when we're maintaining our vehicle and we have to replace our tires, it's going to be some things. And if you have that realtor on your side, they can give you a checklist of things to kind of expect, like changing your air filters or servicing your AC once or twice a year. Some of the things to keep your property moving in the right direction. Having a plumber come out periodically, checking your drains. We have a lady inspector here in San Antonio, and she was just sharing with us how she scopes her own personal pipes periodically to make sure everything is clear because of the trees and rocks and stuff here in San Antonio. But that's good, just having that continued relationship with your home inspector and say, hey, could you just pop by here and hey, I'll give you $50, whatever it is. But you have that continued service relationship with a few trusted individuals that your realtor can help connect you to. Any
Yes,
other
ma'am.
questions or suggestions that you all have? Realtors, do y'all have anything y'all want to add? I appreciate y'all all being on.
I would just add that if you are on the call, then it's probably it's probably safe to say that you are thinking about becoming a homeowner. There are challenges, but however, if you continue to plug in on calls like this, and like Tomekia said, find you people who will encourage you to become a homeowner. Some people like there really is no fast track to purchasing a home. Like we've all made financial mistakes in our life, we've all gotten off track, but if becoming a homeowner is a goal, connect with people who truly truly want you to accomplish that goal, and you will become a homeowner. You just have to be disciplined, and you just have to be focused, and you just have to connect with the right people who can help you achieve that goal. So
That's right.
hopefully my prayer is that everybody will achieve that goal of home ownership because we deserve it. Everybody
Yes,
Amen.
deserves
ma'am.
to be a homeowner.
So true.
Yes,
Exactly.
So
yes.
true. Miss Latoya, did you have a question, ma'am?
Hi, yes. My question is, how long would you recommend waiting after selling a home to purchase one. We recently just sold our home. It was on the market in another state for over a year, and my credit score dropped like 80 points. So I'm like in the kind of like upper 600s now, but how long would you recommend waiting? And I don't have a lot of other debt.
Okay, so I don't want to ask you a personal question, so I'm going to just kind of speak at it. So, with your home being on the market for 12 months, as long as your payments stayed timely, no 30-day lates, or no more than one or two 30-day lates, I would say it's okay for us to start the home ownership journey. Now, with our team, we're only going to do a soft credit check to see where you stand. So when we do that soft credit check, we'll be able to tell you further if we are able to go ahead and proceed and find a program that works for you. If you want to wait, it'll be up to you. But if we can help you move forward, this is definitely the time to get a better deal because when spring and summer hits, prices are going to go up even further. But right now, you do have sellers willing to negotiate on price and on concessions. So I would not tell you to wait. Every year, prices are going up.
Thank you. And as far as the credit score, it's like I got a big drop right after the house sold. Can I
Mhm.
expect that to like level back out?
So the cool thing about a mortgage is it really helps to build your credit score. So a mortgage is not only the biggest thing you'll ever buy, but it's the biggest helper on your credit, right? After a mortgage are vehicles, which I tell people to stay away from if they don't already have one. So anything that's significant that you're paying on is going to help your credit go up and or down in that same manner. So making your mortgage payment on time boosts your credit, paying it off drops it for a second. So will it rebound? It may take another mortgage and a lot more time, but it will likely pop back into the sevens just over time. But when you pay off a mortgage or a car, your credit will take a small dip.
Mm.
Yeah,
Thank
it
you.
will. But having that mortgage on there, like eventually when you get to like 780, 800, like you're going to stay there just by making your mortgage payment on time.
But the drop in your credit paying something off is different than a late payment. So it's not gonna hold you back. It's a different look than a late payment versus you paying something off that you paid on time.
Great point. Yeah, if you have a mortgage late payment, you'll lose over 100 points on your credit.
Okay.
Yes, ma'am. But we're happy to do an application with you, do a soft check, and just see where you stand and see where your confidence is at that point.
What about the rates?
What rates, Mama?
The rates for getting a loan now. Aren't they
They're
like
getting
in the five? They're getting
Yeah,
better.
they're getting better, but they're still not in threes and the fours and things like that. So it just depends on the person's situation. The stronger your credit, you're going to get the best rates available to you. But it doesn't mean that you have to wait till you have an 800 credit score. It's really better to get in a home when you can get pre-approved and get in a home, get in the home
Yeah.
because so many other things change. For instance, the requirements of qualifying change, the computer systems change. You can have a client that gets pre-approved in January and in April they don't get pre-approved and nothing's changed about them. But the computer system won't take it because they've altered the back of it. They've altered it and tightened it up. You know what I mean?
Yeah.
So those are the things that sometimes we delay. Everybody else is moving, but we're still. So we got to get a little bit more active and proactive. We're a few generations back and we got to catch up. But we can only catch up by making smarter decisions and working together. Yep. But that's a great question. Your affordability does strengthen a bit more today with the rate getting better. Good question.
So someone say, was it a buyer's market? I saw that somewhere. Oh, so my answer would be as long as it's a house for sale, it's always a buyer's market.
That's such a good
Um,
answer.
it just
Mhm.
depends on the seller and what you're asking for of the seller. But as long as it's a house for sale, it's always a buyer's
That's
market.
amazing.
Yeah. And that brings me to like the next slide that's on up here where it's just a quick on the other options we have one-time close construction financing, renovation loans, and we have quick equity financing, which is crazy amazing. But I wanted to bring up what you just said, Ms. Phaedra. It's really depending on who you're working with and what their outlook is on the market and your outlook. It is what you say it is. The house is what you say it is. So even if you see a house and it says cash or conventional loan, if you love that house and you're like, no, this is my house, it's in the right neighborhood, it's the right size, it's just ugly. Like I just need to do some stuff to it. Then maybe a purchase renovation loan could work for you. And maybe that's something your realtor can help facilitate for you to help you win that bid. Because listing agents are not thinking about advertising that because that's going to take more time, XYZ. But your realtor can fight for you if that's something that would help you get into a home. So if you can afford a $300,000 house, but you see $100,000 house and it's in the ideal neighborhood, it just needs another $100,000 worth of work. A purchase renovation loan could be ideal for you. So we do those as well. So it's pretty exciting there. So a house doesn't have to be perfect. They do when you're using down payment assistance. You need to be able to move on into them. But if you have your own resources, there are other programs that can help perfect the property. So nothing's
Okay.
off the table.
I
Yes, ma'am.
wanted
Anybody else
to
have anything else?
ask, I want to ask a quick question for someone that wants to purchase new construction for rental purposes. What
Mm.
would be the best loan option that you would recommend? I know you have to look at the whole um, situation, but
Yeah, I have one of those right now, Phaedra. It's funny you brought that up. So it depends on if that person wants to buy that property for an investment property today, or if they want to buy it, live in it, and then invest in a year. So they could buy the house as a primary home with a lower down payment, live in the house for the 1 year requirement, and then rent the house out. But I have a client right now, and she's in your area. So she's buying a new construction in Bentonville, which is what's growing, right? Bentonville. She's got inheritance money, so she's going to put her 20% down, and she's buying a brand new house. And then next month, she's going to buy another one from the same builder. So she's using inheritance money for 20% down payment and buying it straight out. But it's just like any other deal. It just happens to be new.
okay.
Yep. But if your client doesn't have a ton of cash and they want to get into it, my response would be let's buy it as your primary home. Let's fulfill that 1 year and then let's plan to find you another house and you rent this house out.
Okay.
That's the easiest way to become an investor, the most cost-effective way.
Okay, so okay, you said if it's your first time buying a home, I'll make sure I understand it. And
Mm-hmm.
this, you don't want this to be your forever home. You say
Mm-hmm.
you stay in it for a year,
Mm-hmm.
keep building up your money, your credit and everything, and then buy your forever home. After a year, you rent it out.
That's right.
Oh, okay, I'm trying to make sure I'm understanding this
You
right.
got it. So if that's something that you want to do and you have a plan to become a investor or a landlord, then you're going to buy your first house based on business only. Okay, so you're not gonna look at that house as, oh, where my kids gonna sleep and where my mama gonna stay when she come. That's not what we're looking at. We're looking at where's
Okay.
the house, where are the schools, how much rent can I get? Is it gonna need a whole bunch of more work? Does it have hardwood floors or tile floor that's good for a tenant? What am I gonna be able to do to make this an easy rental and be able to cash flow it? Now keep in mind, because you're buying it as a primary, you have a low down payment. So your cash flow projection is going to be low. So we do have to be thinking about that. Since you're not putting 20% down, when you rent it, you may not be making $500 a month. You might make 150. But we got to keep it all in perspective because you didn't put a lot in it. So now this
Yes, ma'am.
becomes an investment over the long term. And as the home appreciates, you now have equity gains. And when you sell it in 20 years, you have a ton of money you can get.
Yes,
So we
ma'am.
have to keep things in perspective and not be listening for the person who's telling us what we want to hear. You got to have people that's going to keep it honest with you.
Okay.
Mm-hmm. Those are great questions.
Honestly, I didn't know Tamika when I first got into real estate. That was 21 years ago. And Tamika has been in my life for the last 3 years. So, with that being said, if you haven't purchased a home, I know that new homes are beautiful, but really buying a home really is an investment. So, sometime maybe you may want the $300,000 house, but you can get $100,000 house and you're already going in with equity, and it could be more beneficial than buying the highest price home sometime. So it's just something to think about.
Yeah.
Um, because Tamika has guided me a lot over these last 3 years. That's my sister, my business partner, my coach, and all of the things. And
Amen.
I take her advice and I utilize it. I don't just drain her brain. I do put it into action. And, that's one thing when you're doing this. You have friends, family members, coworkers that's purchased a home, but their situation is not like yours. Everyone has a unique situation. So it's always good to listen to exactly what your realtor is telling you to do and exactly to what your lender
Mhm.
is telling you to do, because they're telling you things to help you get to the closing table.
Yes,
So
ma'am.
true. So true. Y'all have been amazing. So I hope y'all have gotten something from this. And I'd like to just ask you all to do something, just thinking about what your goals are and your affordability. You can do a quick budget for yourselves on just a little notebook paper, or even make yourself a note in your phone. Look at your primary expenses. Pull out your last 3 months bank statements. Look at what you're spending on. I know it was recently Christmas. But look at the things that you're spending on, things you could cut back on, and ways you can settle any derogatory debts you may have. Go ahead and start settling those things, because there's a lot of information out here telling you not to pay your bills, but who's gonna give you a mortgage when you owe the light company? I mean, it's just common sense, y'all. So let's just do unto our credit what we would want our credit to do for us. That is crazy. Tamika, you crazy. Okay. Y'all understand what I'm saying? But
And if
we
you,
can all get there, y'all, and we all came from somewhere, and we can't help that, but we can help where we're going, because we have
That's right.
God has given us free will, and we can choose
Yes.
where we are going, y'all, and it's
Yes.
never too late. So take this, share it with someone, keep yourselves encouraged and motivated, and most importantly, work with one of these realtors that's on here, very dynamic, and work with the Hunt team for your financing, because we're trying to get to closing.
that's right. And I just want to add, it's no judgment, but I just want to say this. The credit repair stuff, it sounds so good, but let me just say this. Certain things, when they deleting all this stuff off of your credit, they're setting you up sometime to start from scratch. And so if you're paying somebody to take something off, the money that you're paying them, you can take that and pay it towards the debts that you
Yeah.
have on your credit. And then some of these things, like just say if a creditor has filed a judgment against you, those judgments are filed at the county clerk court office. So they can't wipe it off from the court record. So some point it'll come back to haunt you. So just do it the right way
Pay it off.
so it can be smooth and pay it off.
If it's within reason, let's try to settle it. But if not, let's talk about it and see how we can try to get it worked out. But we're super excited to serve you all and to continue to build a relationship with you. And we hope you've gotten something valuable. And y'all have an amazing rest of the day. We want to be to your time. So
Yes,
much.
ma'am.
Thank
You too.
you.
Have a blessed day.
Bye.
Bye bye.
Thank you.
Thank you.